as you have heard the song, blue, blue, my love is blue. It's like my shirt, blue color, right? But I'm sure you know there's a love-hate relationship between real estate investment trust price performance versus the inflation, versus the CPI, as well as versus the 10-year bond yield. So what is that relationship? This relationship holds the key for making profit in your REITs portfolio. This is what my interview is, and this is what this video is all about. So as usual, if you like it, smash the like button and subscribe and come to our classes. Synchronous with what I actually feel, because if you look at the key inflationary numbers, be it actually CPI, CPI core, PPI or PPI core, as well as the University of Michigan inflationary expectations, it is clear that you're going to see inflation numbers of 5%, which first was notched up just last month, continue to be the case in the next 2, 3, 4, or possibly 5 months. Now, what this means, Brian, is that, you know, with this onset and the background being that the 10-year bond yield, instead of going up, has been coming down, and if it remains down at the 1.35% for this next 2, 3, 4 months, then Yellen is actually on the right track in calling the case, because this would mean that you have inflation. Inflation should fall off next year, but you cannot be increasing the US 10-year bond yield. Now, the low 10-year bond yield, and which actually presupposes that the 30-year bond yield takes its cue from, and that's goes in the pricing of the mortgage market, you know, will be artificially depressed for the next 2, 3, 4 months. You know, that is what she's worried about, and this is something that she has actually hit, so to speak, the thorn on the durian.
Now, speaking of the thorn of the durian, another durian that and another lady, a very influential lady, ARK Invest Kathy Wood. Now, she has warned earlier this week of a valuation reset on Chinese stocks because of the clampdown by Beijing. Now, her weighting on her ARK Innovation flagship ETF has gone to less than 1% of Chinese stocks. Now, while the next generation internet ETF has fallen to about 5.4%. So definitely she's just paring down her Chinese stock holdings. But what's your view of Chinese stocks and their valuations moving forward?
I actually admire Kathy Woods. I'm actually quite puzzled at the way she actually pared down her stake in the Chinese internet stocks. You know, so for example, when we look at her sale of Tencent as well as JD.com, you notice that essentially if the prices are quite reflective, that means because we get daily updates on the sale prices as well on the stocks that they actually hold, you'll be surprised that actually they are making losses on that. See, so but I think on her views on the reset of the Chinese stocks, to this extent I do agree with her, because what is China is undergoing now is a move from the anti-monopoly, antitrust, you know, to actually moving into data and cybersecurity watch. This actually has therefore derailed, you know, the so-called good performance of TT IPO. But this has also set the trend since last week we mentioned in your program that a few things is going to happen. That is actually more Chinese IPO that is pertaining to data and cybersecurity are likely to list no longer in the US, but in the other major markets like Hong Kong and Shanghai Star Market. It also could actually set off the wave of dual listing or secondary listings of stocks that are already listed in the US in the primary market to move back to Hong Kong or China in a big way. You know, so in that regard, this major reset may depress valuations for the current year, but I think if in anything, the earnings result season that's going to kick off come next week for the likes of JD.com, Tencent, Alibaba, Meituan, it's going to tell you that essentially that, hey, this conglomerates, these big companies are likely to continue to grow 20 to 30%. Now, to what extent, therefore, would these valuations, if they are expensive, you know, then they will be looking cheap come the end of the year, because come the end of the year, people will be looking at discounting the future year earnings.
Yes. All right.
For our next class on 7th of August, 2021, come to our website, GCP Global, as published below, and sign up and catch the early bird special so that do join us for our next class on 7th of August, where we will go through the latest results on real estate investment trusts, the results, and the impact on their share prices going ahead. That's how you actually make money going ahead.